Yes, it was expected that inflation will cool off. Yes, the number was expected to be 5.3, which would have been which is a great sign. But at 4.9%, this is way below what I'm guessing most people were anticipating. So a couple of good news and an otherwise beleaguered data points coming in. Mind you, the trade deficit data was not the best yesterday, but CPI pleasantly lower yesterday, and WPI currently at 4.89 or 4.9 versus the poll of 5.3. The question mark really would be, what do economists expect the next month data to be like, and what would the expectations be from the Reserve Bank of India after these numbers are coming out? And that would be the principal question that we would want to ask all our experts as well. Just before we go to them, anything else you're picking up?
Well, that's the headline inflation number that we have. Of course, we'll be watching out for all the components. It's the lowest since November 2009, so that's rather heartening. Watch out for the primary article inflation seen at 6.7%. Fuel will be a key monitorable given the rise in the diesel prices. And, of course, the manufactured products is seen lowering to 3.8%.
Dr. C. Rangarajan, he joins us right now on the phone line. Good having you, Dr. Rangarajan. Thanks so much for joining in. You would be happy, I'm sure, with the WPI numbers as also with the CPI numbers yesterday.
Yes, I think that the fall in the WPI inflation is much more than one had expected. And what is also interesting to see is that this fall in inflation is seen in all the three segments, namely primary articles, food articles, fuel and power, as well as manufacturing. Therefore, that is reassuring in some sense. And not only the headline inflation, but also the non-food manufacturing is very much in the comfort zone. All of this is welcome news.
Dr. Rangarajan, do you think the government has done enough for the RBI now to be more sanguine about the future growth inflation dynamics and that they will continue to ease policy further?
Well, I would say that these numbers provide greater maneuverability to a Reserve Bank. The only disquieting feature in this context is the fact that the retail inflation still remains at a very high level. Even though retail inflation has also shown the same tendency in terms of falling in April as compared to March, it still remains way above the wholesale price inflation. So that is a factor that needs to be taken into account, and perhaps a more careful analysis of the reasons why there is such a vast and a big difference between WPI and CPI inflation is persisting, needs to be done.
I want to ask you for a specific number, Dr. Rangarajan, but there are a couple of moving pieces, the way diesel prices have been increased and the likelihood of that going up further too. Do you believe on the WPI front for the next few months we are firmly below the 5.5 mark, or are there upside risks to these numbers?
Well, there will be some adjustments because even in the case of diesel, some of the major adjustments have happened, but there is still some distance to travel. But the international prices are also moderating as far as petroleum products are concerned. Therefore, it could lead to some rise in the fuel and power in the coming months. And if the monsoon turns out to be normal, there are signs that it will be so, then food inflation will also remain more or less at this level. Then I would see the wholesale price inflation remaining more or less at this level.
What would be your growth projections for the Indian economy given the high lending rates, the kind of weak pickup that we've seen in the overall consumption?
Well, we have projected a growth rate of 6.4% for the year. That is based upon a growth rate in agriculture of a little above 3%, and manufacturing growing at 4%, and the services sector around 6.5 to 6.7%. Therefore, I believe that this is a realizable target, and I still hold on to our projection of 6.4% as a growth rate for this year.
Dr. Rangarajan, did the trade deficit numbers for April disappoint you, or do you believe that May will show a much improved number?
Which one are you talking about?
The trade deficit numbers, sir. I mean, gold
Trade
imports.
deficit, and the trade deficit numbers have come as a surprise. I mean, one didn't expect that it will go up this much. One of the major reasons is the sharp increase in the import of gold, which could be an aberration in the sense that people might have rushed in to import gold because of the sudden drop in the price of gold. But if gold prices settle down more or less at this level, then demand will taper down. We had forecast a current account deficit of something like 4.7% of the GDP in the current year. I still believe that we can stick to that.
Although we are certainly cheering that CPI inflation number, which came in at the lowest level since March 2012, how worried would you be about the gap that we're seeing in the CPI as well as the WPI numbers?
Well, I think it really needs to be analyzed very carefully because the CPI numbers are remaining way above the WPI numbers. As we all know that the CPI covers the service sector to some extent, and perhaps the prices of some of these services are also going up. In fact, even if you compare the core inflation, there is a difference between WPI and CPI. Of course, the core inflation according to CPI is vastly different from the core inflation according to WPI. Therefore, even after you exclude food and fuel, the CPI inflation includes a lot of services whose prices might have gone up. Therefore, it is disturbing. I mean, it is really needs further analysis to find out why the CPI inflation still remains at that level.
Yeah. Before we let you go, Dr. Rangarajan, I mean, we are maybe 20 bips away from that, but the rupee back to almost the 55 levels. Is that disconcerting? I read a couple of reports which spoke about much lower levels as well.
Well, I believe that the current account deficit, as I mentioned earlier, will be somewhat lower as a percentage of GDP, but in absolute terms it may be higher. But I expect the current the capital flows to be adequate to cover the current account deficit. So taking the year as a whole, I do not see much change in the exchange rate, but there could be periods in which the capital flows are not coming in, and therefore there's some pressure develops on the rupee. But I have a strong feeling that the exchange rate of the rupee will remain more or less at the current level during the year.